Marketing reports often contain loads of metrics, but in most client conversations, only a few actually matter. My name is Salam from Insights Titan, where we empower businesses to make better decisions with data and drive growth. Marketing platforms produce a lot of data. It could be traffic reports, campaign dashboards, attribution models, or audience insights. But for account managers, the challenge is not lack of data. The challenge is understanding which metric explains the marketing performance clearly. And in most situations, there are only 5 metrics that help you answer most of the questions that clients will be asking. So let's go through them. The first metric is traffic. Traffic represents the number of users or people visiting your website. For example, your report might show that the website had 18,000 visitors last month or 25,000 visitors this month. But that doesn't tell you how people are reaching your website. The traffic alone doesn't mean your marketing was successful. The next question is always, where did the traffic come from? It could be organic search, paid advertising, social media, or direct visits. Understanding the traffic source helps identify which of your marketing efforts brought that visitor. The second metric is conversions. A conversion represents an action that matters to the business. It's important to say that again. A conversion represents an action that matters to the business. So for different businesses, it could be a product purchase, it could be a lead form submission, booking consultation, or sign up for a service. If traffic increases but your conversion remains the same, it often means that your visitors are not taking action or there's no call to action on your website. Conversion helps your marketing activity convert into real business outcome. The third metric is conversion rates. And conversion rate shows the percentage of visitors that actually convert, depending on what conversion is for the business. For example, if 10,000 people visit your website and 200 make a purchase, the conversion rate is 2%. Conversion rate helps you answer an important question also. Is the website effectively turning visitors into customers or leads, depending on your conversion? If traffic increases but conversion rate drops, there may be an issue with your targeting, your messaging, or your landing page experience. The fourth is customer acquisition cost, also known as CAC. This metric tells you how much marketing spend is required to acquire the customer. For example, if a campaign spends $5,000 on advertising and only generates 100 customers, the cost per customer is $50. Your CAC determines whether your marketing efforts are efficient. And if your CAC rises significantly, the campaign needs to be optimized. The fifth metric is the return on ad spend, which is the most important. It's also known as ROAS. The ROAS measures how much revenue is generated from advertising. For example, if a campaign spends $1,000 and generates $4,000 in revenue, the ROAS is 4. It means every dollar spent generated $4 in revenue. The ROAS helps evaluate whether advertising campaigns are profitable. So all of these 5 metrics put together can be captured into a full marketing story. The traffic tells you how many people reached your website. Conversion tells you how many people took action. Conversion rate shows how efficiently visitors convert. The client acquisition cost shows how much it costs to acquire one customer or how much it costs to acquire customers. And finally, the return on ad spend shows whether a campaign generates revenue efficiently. Understanding these metrics allows you to explain performance clearly and confidently. Again, if you found this useful or it was valuable to you, feel free to like, share, and subscribe. Cheers.